Hey everybody, what's up? We are back with another portfolio update. Today I'm just going to go over a few updates I've made to the portfolio, starting off with the bonds. I added two more $1,000 bonds. One is expiring in 3 months and the other is expiring in 6 months. My plan with this is to continue to have the money as relatively liquid while also getting fairly decent interest rates. So usually the longer the time period of the bonds, the more interest you get, or the more of an interest rate you get. So like, for example, a 1 month or 3 month bond pays less percentage wise compared to, like, or I shouldn't say that, it pays more percentage wise actually compared to like a 1 year bond, and that's because you don't have the money as long, or I should say the government doesn't have the money as long. But anyway, I have one 3 month, one 6 month. What I'm going to do is every 3 months I'll renew the three, every 6 months I'll renew the six, and I'll just continue to kind of go through that as the year progresses. The last one I have is going to be uh, I don't know what the word should be, redeemed in about 2 weeks or so. And once that one's done, the money will be going towards more stocks. So my recent transactions, which today is obviously the last day of the year, I bought multiple more shares of a few of my stocks, which I'll go over. It's not in this spreadsheet yet, as far as I'm aware, but what I can do is basically just read off the ones I have, because I have it so that Vanguard sends me a bunch of text messages every time I buy something. So I'll just go over the ones that I bought today. So starting off with Celsius, I am down on nearly every single share that I've bought so far. I bought five more shares today at roughly $26 a share. Really just looking to further average down on that until we find a solid bottom for the stock. But yeah, I still strongly believe in the performance of the stock. It's just a matter of where the market wants to buy it. Other than that, Chewy still up on everything. Saren's still up. Crocs, I may have. No, I did not. I did not buy more Crocs. Still up on that overall. Dollar General, I bought one more share at, let me see here, at $76 a share. So right about in the middle here. I'm still expecting this, similar to Celsius, to um, have a very good 2025, I should say. Fastly, I expanded my position to 10 shares at roughly 950 a share. Same thing with GMM. I believe I added another 10 shares of that as well, which I did at 470. So GMM actually went up a lot. However, just based on where the stock price is, I literally put $30 into it. I wanted to have more before it possibly exploded, which I do believe it can and will in the near future. Um, but overall, I just am really expecting this to do well. So I wanted to buy more while I still had a decent chance to. So 10 more shares at 478. And that is it for, oh, sorry. I also bought, how many here? I bought 10 more shares of Snapchat as well, which again, the next portfolio update I do, they should be in. But Snapchat is right at $10 again. I bought 10 more shares at 1088. And honestly, Snapchat being at $10, in my opinion, is a fantastic buying opportunity. But yeah, that's all I got. Another thing, I don't know if I went over that I bought new, but I did. I bought 15 shares for around $10 a share, expecting that to do fairly well. But let's get into some of the charts that we have and kind of see what's been going down with some of these companies. So first of all, for my, where is it? Here we go. For my mutual fund, which roughly tracks the S&P 500. And one thing I would like to point out is that it is an S&P 500 mutual fund, but it is specifically geared towards dividends and dividend appreciating stocks. So while I am up 5.8%, I would like to point out that my total gain loss, which I realize now is just double here, so I could actually get rid of that. But my total gain is a lot lower than it actually is on this. So, for example, I think I originally invested maybe, I'm not really sure, but my total gain is at $265. I have made a lot of money off of this stock just from dividends. So I believe my total percent return is probably closer to 10%. And I believe I bought the stock maybe halfway through the year. So it is definitely a lot higher than this. I mean, I've been getting $25 a month or higher just from this so far. And that's including reinvesting. That's why it is at a weird amount of shares here, because it is being reinvested very, very frequently. I believe I originally bought maybe 85 shares or so, but I'm not really sure on the actual number. It could have also been 4,000. I could have put 4,000 in and I'm up 541, because I do remember doing an even number. So that might be what it is. I don't really remember that. But other than that, everything else, we will go into the charts here and start looking through them. So Celsius, again, has been taken a bit of a beating recently. I'm still expecting it to find support right here, which you can see it has kind of bottomed a little bit, but I'm expecting it to find support around this area and continue upwards. We did see it recently get all the way up to 32, which I'm hoping we can reach back up to, because if we look at the chart here, 32 is essentially positive for me with all of the averaging down. So I would, of course, like to be positive on that. Next on the list, we are going to skip down and look at Dollar General, just to kind of show what I've been seeing. So Dollar General is in this massive wedge, which I believe I drew during the last portfolio update I did. And one thing I'm noticing is that it is kind of making a bottom, straying away from the lower support line of the wedge. Hopefully this means that a higher low will result in some support upwards and we could start to see some movement in the upwards direction. And the higher part of this wedge is in the 90s short term. And my total average on the stock is below 80. So hopefully we can see that in the next few weeks or months and get towards the 90s possibly. Not planning on selling, because I do believe this is a stock that should be in the 200s or more. So just knowing that, I'm not planning on selling anytime soon, but that's all we got. Other than that, we can look into NU and kind of show what I've been seeing there. So this is a very, very good stock for financials, but also I do believe it is at a very good support range right now. So the company is right at where its IPO price was, and just a few months ago, it actually hit this price area um, again and bounced off drastically. And since then, they have had some fairly solid earnings reports. So I'm hoping that where it bounced earlier, they will have more support and go higher. That is kind of what I'm expecting with this. I usually don't do Fibonacci's, but it just fit really well here, so I kept it in. But this is kind of what I'm expecting. I do want it to see the 16, hopefully higher range in the next few weeks or months. But overall, there's really not too much more I want to go over. Everything I kind of went over last week. So let's get into the dividend side of this, and we could see here that um, so in the past week, I received $4 from YMAG. I received just under $7 from YMAX, resulting in a weekly yield from the dividends of $1.16, 1.16%. Total performance is down right around 4%, which, to be clear on that, that is just based on my total equity. And one thing I would like to point out is that in this time where it is falling, the overall market, which we can see here, has dropped a lot. Oh, that is not the right one. The overall market has fallen significantly. So if we go here and we go to price range, I started this just about 2 weeks ago. And if we go to the past 2 weeks, we can see right here that it has been dropping significantly. So even just in this range, we're right around a 3% drop. So overall, that is fairly in line with where the market is. And these numbers aren't taking into effect the yield I'm getting from the dividends. So while I did lose a significant amount in the equity of the actual shares, I gained a decent amount with the repurchases. And also, so this is in 2 weeks, my total shares went from 53 to almost 54. So ideally, this will be around 2 shares a month, which means that within the next year, I will have basically 50% more shares. And ideally, if they do hold their value, which I am expecting them to, we can go into YMAX here and see the overall performance of the portfolio. Since its inception and its paying out of these dividends, it is down 14%. However, the payouts for this have been, in my opinion, since the weekly payments have started, which actually is only a couple months ago, it has only dropped about maybe 4 or 5%. So I'm really expecting this to do really well in the future. And I think the dividend payments will very, very easily and even significantly outweigh the decline of the actual stock price if it does continue declining, which it could also just not. One other thing is YMAG, which we can see right here. YMAG is actually basically right at its inception price, only about 70 cents below it. And it, again, with the weekly dividends, has been increasing. So with the stock price appreciation, as well as these very consistent dividends that are paying out fairly large amounts per share, I am expecting a lot of really solid performance from both of these in the near future. But overall, in the 2 weeks that I've had the stock, I've gotten just under $17 in dividends, as you can see on the bottom here. And honestly, even though the market fell and essentially wiped out the gains from the dividends, when it does return back upwards, the extra shares I have with the continued reinvestment of the dividends, I think will pay off massively. One thing I do like about this is that you're essentially always averaging into the stocks. So no matter what, you are buying shares every single week through the reinvestments. And I just think that will be huge for long-term growth and performance. I think that would be really good. So overall, that's all I have for this week. Hope you enjoyed. Overall, portfolio is looking pretty good. I'm ending the year up just about 15%, which is really solid. Considering I did not buy a single stock until October, and I didn't buy my mutual fund until I believe June or July, I think 15% growth is really, really solid. So, yeah, that's all I've got. Happy New Year to anybody who is celebrating, and see all you guys in the next video. Thanks for watching. Hey everybody, welcome back. New portfolio update video. I made a chart here to kind of show better my actual portfolio, just to show the actual like diversification and allocations of everything. So one thing I want to really highlight is Cerence technology has exploded over the past 2 days. It's currently at $20. One thing I do want to say is I sold about 10 shares at $27 this morning, which is fantastic for me, at least. I do believe the stock will probably hit maybe 24, 25 again, probably either today or this week, and then maybe do a bit of a slight drop as it kind of collects its own value. But overall, really looking good there. If you compare the portfolio to last week, I bought a ton of new stocks for the new year. I think I already went over all of them, but not new stocks, but I bought more shares of the current stocks that I have. And I also figured out how to automatically get the prices to update here. So throughout the video, you might actually see the prices update. Um, but so this is my entire portfolio. So bonds are around 19%. My mutual fund is 30%. Celsius is 9%, which I do eventually want to reduce once I'm actually up on the stock, because it's a little bit overweighted for a stock that I do believe in, but should not be that much of my portfolio at the moment. Cerence, again, was actually my most valuable stock this morning. When I had 70 shares and the price was $27, it was well past Celsius, and I figured I should probably sell some of it just to take profit, because I feel like anybody would be stupid not to take profit there. I think my average share price was like 290 or something like that. So with the 10x, it would be dumb not to take profit there. So overall, sold off some of that. And other than that, everything else looks fairly normal. Most of my stocks are between 1 and like 5% of my portfolio. I really don't want to add many more past here. Right now, I have 16, actually 15 individual stocks. I think I want to get to around 20 to 25. And after that, I'm probably going to stay in that range for hopefully a long time. But overall, I'm not sure what I'm going to do with the money I got from Cerence. I still have more in my portfolio in just the money market, which is basically just cash. But I don't know where I would like to reallocate the stuff I sold from Cerence yet. Probably into Mofi and PSHG, just because those look really good so far. Although GMM actually has been doing very well. You can see it's at 455 right now, and I'm pretty sure I bought it at like $3. Um, three something at least. So that is doing very well. I would like to buy more shares eventually, but right now it kind of just looks like the stock is a little bit too high. And although it is going down a little bit today, it is up so much in the past few weeks, or actually more like 2 weeks or so, that I just don't think I'm going to buy more shares right now. But if it does take another dip, I will, because this company definitely has a lot of value to it, in my opinion. But another thing I just want to look at, this video is going to be a little bit quicker just because I don't have too much time today. But another thing to look at is Cerence's chart has been absolutely insane. Let me do a little bit less so we could see the day today. So here was yesterday, up 46% in the morning, rose all day long, a little bit of a dip, and then coming up at the end of the day, right around $19. I was very happy with this, and I believe I made a video saying I'm expecting it to hit anywhere from 22 to 25, and that's exactly what it did. It actually went all the way up to 27 at one point, which is actually when I sold. I have the confirmation text message on my phone that says 2686, which I'm very proud of, that it went through at the perfect time there. But overall, I mean, it looks pretty good. I think it will hold this value, at least short term. We might see a retracement somewhere around maybe, honestly, maybe 15 or so, just based on where the support area is. It wouldn't surprise me to see that. Now I'm moving things around. It wouldn't surprise me to see a retracement to around 15. But overall, I think the value is here now. People know about the stock. There's a lot of new investors that are in and optimistic. So hopefully we can see some long-term value gain out of this. But yeah, that's about it. Um, Going back to the portfolio, other than that, I mean, nothing else has stood out too much. Super Micro has actually been doing fairly well. I will go into that. SMCI, they have been up a lot today, up 10% today. And as I kind of predicted in my last portfolio update, where I bought the stock right around here, um, I do think that this is their support level. We're going to see them continue to bounce off of this, possibly heading back up to 50. The value is there. I mean, they had that great earnings report that we went over in my original review. The only reason they dropped was their accounting firm dropped them and they immediately got a new one. And now they're completely fine. As far as I'm aware, I mean, the earnings report was excellent. So I do think that we will see them regain $50, possibly higher, fairly soon. So that's all I got for them. And I think that's all I'm going to go over today. I really don't have much more to highlight specifically. All of the stocks have done very well. Um, for me. So overall, looks really good. And I think I'm going to keep this format just for the portfolio, just for it's easier to look at, I think. But that's all I got for today. So thanks for watching, and I will see everybody in the next video.
Everybody, what's up? Today we will be back with another portfolio update. So I know I just did one of these probably 3 days ago, 2 or 3 days ago, but this is for the dividend portfolio that I have that I'm kind of, it's a new venture for me to try to make some passive income, I guess, if you want to call it that. But be more focusing on that. So going to that, and then I'm also going to go into the slight market drop over the past few days that has definitely affected a lot of my stocks, and I'll kind of go through some charts and just show what I'm seeing. So anyway, if you're interested, make sure to subscribe. I usually do these portfolio update videos like once or twice a week, depending on what happens. But yeah, let's get into it. So this is the data I have so far. The week we're going to be looking at is this one. So for the two high dividend paying funds I have, YMAG paid a total dividend of just under $8, reinvested it into almost half a share. YMAX paid $5, reinvested about a third of a share. So today is the first week that my total equity has actually increased, which is actually I'm trying to think. These would kind of factor into last week a bit because that's when the dividend was collected. However, it was reinvested today, which is all the numbers I am using. So, for example, if I click on or not that. If I show the share prices here, 1918 and 1727, that is the price that the dividend was reinvested at. So that's basically just how I'm tracking the stock price. So you can see first 2 weeks had a drop of 3 1/3% and 1.5%. This week I am up 3/4%. And as you can see, one thing I want to point out is that in this time, if I just get out of ad block here and go to the S&P, which I believe these are mainly tracking, and actually I could probably go to QQQ because half of my dividend portfolio is the Magnificent Seven, which I think QQQ tracks a little bit better. You can see that in the time that I've been doing this for the past 4 weeks or so, the market has dropped fairly significantly, 2 1/4, slight increase, slight decrease, and slight decrease. So the market has dropped in that same time. So the returns that I have here overall are affected by that. So what I'm really focusing on is the percent yield per week right here, which is what I'm getting out of the dividends. So despite the equity going down, I am getting more shares. So when the market does kind of start bouncing back a little bit and recovering and whatever, I think I will benefit from that more. And also just thinking like this is less than a month and I've gotten almost $30 in dividends from less than a month, which is pretty solid for anybody. So overall, that's about it for this. So now we'll go into the rest of the portfolio. And actually, I just realized I have that right here. So I reorganized it a little bit so that it would be in order from smallest to largest. However, I don't think that shows the three smallest now, and it doesn't. But I mean, you could see them here, so it's whatever. So overall, you could see, I believe from last week, my mutual fund and the bonds are now more than 50%. That is mostly because CRNC has dropped back down from its super high recently. It's kind of settling. So we are going to go into most of the stocks that I have, starting with Celsius, of course, because that is my largest holding. So Celsius has seen another bounce, and honestly, it is higher than where the last low was. So hopefully, we can kind of hold the support here and see some higher prices soon, which would be really nice. Next up, I believe we have CRNC still. So I told basically everybody this in my last video. I said this exact thing. I said it's going to shoot up
hit the $25 range, which it did, and then drop back down to around 15, which is exactly what it did. People are still freaking out about, oh no, losses and whatever. I sold 15% of my position at 26.80 something, and worked out great for me at least. But I don't really care if it drops back down. I really don't, because when I bought this stock, it was at $3 and it sucked. But honestly, two good earnings reports in a row, really three good earnings reports in a row. However, this one had some negative guidance along with it, which caused a big drop. But one more earnings report will probably send this right back up to where it was. I'm almost confident that it'll be solid just because of all the increased interest in this stock. But honestly, I have no worries. I don't really care about the stock dropping back down to 15. I expected it. I said I expected it, so it's whatever. Obviously, it would be great if it held $30 or just under 30. But at the end of the day, I really don't care. It doesn't matter. Long term, it can go anywhere, and it's fine with me. Next up, we are looking at Chewy, which actually is weighted more than CRNC right now, which I didn't realize. So we will look at Chewy, see how they're doing. Chewy has been doing fairly well. Since I bought the stock, it's basically just been in this consistent uptrend. And actually, it's sort of in a rising wedge at the moment, which I believe I talked about in one of my last portfolio update videos. But this wedge could have some issues because if it breaks out the bottom, we're going to have some problems. But right now, it looks like it's perfectly fine the way it is. And just with how low the stock price is compared to the past, I think it will break out upwards. So overall, fairly confident there. Next up, let's go to Lulu and then Dollar General. So Dollar General is actually taking another hit today, but I'll get into that in a moment. So Lulu, I believe, will return to this support line probably right around 330 to 340. It could possibly go flat for a bit, maybe hit 350. But overall, I'm confident in the long-term growth of the company. This is one of my larger companies that I own, and I usually focus on smaller companies just because of the fact that it might not have as much growth potential. But honestly, I'm fairly confident in this. I mean, the earnings reports recently have been really, really good. So no issues here. I'm actually probably going to do another analysis of Lulu soon because I haven't looked at them in a while. But yeah. And then next up, Dollar General, checking out the price here. So I have shown that they are in sort of a falling wedge for many, many months now, practically years actually. And it looks like we're going to hit the bottom of it once again. I'm hoping that this is the last time we hit the bottom of this wedge. Um, it looks like they did just have a price target lowering. However, that price target is at $100, which is 50% higher than where we are now. I think, yeah, 40% higher roughly. But yeah, so honestly, it's whatever. I bought another share today, which actually I should probably add to this. I'm at 11 shares now. And honestly, I'm just going to keep doing that. Like, it's truthfully, I believe in the company. I interact with the company in my own personal life. So it's whatever to me. I like the company. That's all I really need. And that has worked for me so far in my life. So it's whatever. Snap, PayPal, and then Crocs we will go through. I am just going to go through every stock here because I haven't done like a full, thorough analysis of everything in a little bit. So Snap kind of has two interchangeable support levels that I've been watching. It does look like it's going to head back down to around $10 to $11 from this recent bump. However, it also looks like it's kind of starting a breakout range here. Now, this also could have not breaking out further, could have kind of been stopped by the overall market decreasing, but honestly, it probably just needs some more time to consolidate. A lot of people don't like Snapchat stock just because like it's one of the tech companies that hasn't really been booming. And honestly, I just think that it's oversold and has a lot of value. So there is a news thing today, which is just announcing its earnings on February 4th. I will be reviewing the company when that happens because I feel like a lot of people don't believe in the company. And I, for the most part, do. I think they have some things they need to work on, but I will probably do another analysis of them as well fairly soon. But yeah, after Snap, we're going to PayPal and then Crocs. So let's get into that. So PayPal looks very strong. One thing I will say is that it does look like a top is forming right here. So unless they could see another breakout, we might see a return to some lower prices. One thing that could happen is right here, showing this kind of support line. We could see it. Now, honestly, I don't think this will happen, but it could, just based on where the last major lows were, hit right around 60 to 65. Um, I really don't see that happening, but it is a possibility. Another possibility is it continues the long term support that it has here. which has been basically over the past 4 months or so, where it'll just bounce off this and head higher. But I think for that to happen, we would have to get to this earnings report. So possibly getting right to that $90 range right here, and then having this earnings report as kind of a catalyst to see where it's going to go after that. That's kind of something that I would expect to happen. We'll have to wait and see. So next, we will look at Crocs. So Crocs is still in the very, very large trading range that they've been in for a while. Now, the last time they hit the bottom of this, we did see this again where they popped back up and then dropped significantly afterwards. So that could happen again here. They could break the support. I don't know. If the support is broken, I honestly might just sell the stock. But I'm not sure yet. Financially, the stock looks fantastic, ton of growth, a lot of potential. But if this support is broken, I feel like the next gap would probably be like 75 ish, possibly 80, 85. But I feel like that's just a bit too much for me. So we'll have to see. But financially, I'm confident on the company. Next up, Robinhood and Super Micro. So let's go into Hood. Robinhood stock has been on an absolute explosion recently. That's kind of a goofy way of putting it, but I bought it right here in this little dip here, and it has been booming ever since. It does look like we are finding kind of a triple top happening here, but overall, I don't expect much to happen with the stock price. Can't imagine it going much lower. Bank of America just raised the price target to $55, which is awesome. Average price target was 47.65 there, so fantastic news for that. It's nice to see kind of the bigger players in the stock market world taking recognition of the stock for once, which honestly, I feel like Robinhood stock got trashed for years and now they're finally making a comeback. So that's pretty nice. Overall, looks good. We are above, I believe we're above the IPO price, which was right around 35 ish, I believe. So we are above it, which is cool. But other than that, we will look at Super Micro now. Super Micro has been on a little bit of a bouncy castle chart recently where they just keep popping up and down over the past 2 or 3 weeks. So popped up a few days ago, 10%, 2 days in a row, basically. And now we are back down. And today we are down two. But overall, I think this support will hold. I think worst case scenario, we head back down to right around 20 to 25. But overall, I think it will be fine. I mean, I'm planning on just buying more if that happens because financially, this stock I think is fantastic. And they really just kind of had problems that were out of their control, at least in my opinion, that caused their stock price to drop so much. So I think we will be seeing a lot of growth from them, especially in 2025. We'll be seeing a lot out of this company. Next up, we have Hims, which actually I always thought I had a lot more of Hims. I always thought it was like one of my larger companies, but it's really not. And one thing that could be helping that out is they have gone down from their high of right around 34. I do actually, funnily enough, I have a price target here at 23, which I believe I set last time, which is where I wanted to buy if the stock price hit that area again. And it looks like it possibly will go down to around this range once again. I believe the place I originally bought was right around here in October. And I mean, it looks fairly solid. We are still in the uptrend, and I do expect them to have more highs after we hit this support. But overall, it's just another thing where we have to see where they go. So, yeah. And next, we have new Fastly GMM and then performance shipping. I'm going to go through these a little bit quicker because I feel like I've been running on here a bit. So, new again is just in this fib range that I kind of drew up and financially looks good. That's about it. I think the company will continue to go higher. Yeah. Fastly, look at them. So they actually broke the channel that they were in. We could possibly see the stock going lower. I honestly don't know, but I mean, financially, I like them. I think they have a lot of room up, obviously, as we continue to zoom out here. They have a lot of room to go upwards. So, and I mean, you could see now this is just trading view, but 1, 2, 3, 4, 5, 6, 7, 8 positive earnings reports in a row with like beaten estimates. There's got to be some kind of value being built here, and the stock price keeps declining. So, in my opinion, we will see them go back up fairly soon. Next up, GMM. So GMM bottomed out and rose a decent amount from their last earnings report. And now we are seeing them come back down. They're actually down almost 12% today so far. I honestly might buy a little more depending on just what happens here, but I think I should probably look back into it and check out this earnings report. I may do another video on them depending on how much time I have to do it, but We'll have to see. And then finally, PSHG, Performance Shipping, is actually up today despite the market being down and basically everyone else being down. So we did see them bottom out right around that support level that I drew last time. And now they're kind of on a little bit of a rise, but honestly, there is so much I don't even know the word for it, back and forth that's going on in this trading range. But the thing is, this trading range goes from $1.60 all the way up to 250, which is a massive increase. So either way, even if it just stays in this range, there's a lot of money to be made there. So fairly solid. So overall, I think that's it. I covered everything. This is kind of a more complete portfolio review than I normally do. I kind of went through everything, but yeah, that's about it. Thanks for watching. Hey everybody, what's up? We are back with another portfolio update. So I put a little bit more effort into actually visualizing some information about my portfolio. So some things I want to go over. First of all, I have my basically my breakdown of my overall portfolio right here. And I also have the starting value of 2025. So we have the lifetime returns, year to date returns, and then also just returns per year. So I started this account in like October or November of 2023, and it was just money markets. 2024, I started buying stocks. I think I bought my mutual fund about halfway through the year, and then I started buying stocks around October and November. So an just over 8.5% return in 2024, and then so far in 2025, we are at 7%. Looking at the breakdown, we could see I have about a third of my portfolio in ETFs, another third in money markets and bonds, and then the rest in stocks. I have the stock information right here, as well as actually I have everything broken down into one pie chart here. So one big change I did recently was I sold my mutual fund that I had previously, which if you watch any of my other portfolio updates, you'll see that I had one mutual fund that was supposed to be for like dividend growth, but in the like 6+ months that I've had it, I think I got like 40 or $50 in dividends from it. So I just didn't really think that was worth it. So I split it up and basically evenly distributed it between these four ETFs here, which I'll go into in a moment. And all of them already are up a significant amount. I put 1250 into each of them, and all of them are over 1300 right now. So I would say that's a significant improvement from the other mutual fund I had. But one thing to note here, Celsius, I did put more into, which if I could find, oh, so this is organized by largest positions to smallest. So some things I updated, I added 5 more shares of new holdings since the last time I did an update, I think. Also 5 more shares of Snapchat. I got a dividend of Dollar General, so there's a slight bit more there. I might have bought another share of that too, I'm not sure. And then other than that, just the new ETFs, and I put 4 more shares into Celsius. I think I'm done with Celsius buying for a while now because I do have a lot more of it than I really wanted to. And most of that was just for the sake of averaging down. So there is a bit more in there than I want. But actually, let's go into something. So first of all, Cerence has come down a significant amount from its high of right around 27. Now I sold basically I put about $200 into it and I sold about 250 worth at $26. So I returned my original investment and more already, and now I'm just holding what I have left. I am expecting this stock to go higher in the future now that we have a lot more value into it. I think this next earnings report is going to be fantastic, honestly. But overall, expecting big things with the company for this year. So I think it will be going a lot higher from here. But um, yeah, doing okay there. We can see there was a bit of support found right around $12 a share, and now we're at just over 14. So overall, not too bad. Not too bad. Celsius, which I did just release another review of today, earlier today, is looking at some new lows, which again, I do think we will break out of these at some point, but it's just kind of a matter of time of when that will happen. Looking at some other holdings, so Chewy has been doing pretty well so far, and I honestly haven't really looked into it much, but basically only up. I think I drew this sort of wedge area the first time I reviewed it, and they have just been rising right through it since then. So no complaints here. I'm up a lot on Chewy. Yeah. Other than that, there's nothing else I really want to get into. Oh, Hood and PayPal. So Hood just recently hit $50 a share, which is awesome because I bought it at $23, which means I'm now up over 100% on Robinhood, which is fantastic. And then PayPal is at they were just over $90 a share, which is awesome. And I'm pretty sure, I don't know the first time I reviewed it, but it was a couple months ago, probably in October. I think I bought it right around $80 a share. So up a decent amount on them as well. But overall, that's all I really want to go into with the portfolio. With the Robinhood side of this, with my dividends, looking pretty good so far. If we go into this, you could see this past week has been very good, returned about 4.33%. And that was also with a smaller dividend than the weeks prior. So looks pretty good. Um, for them. I think I'm very close to breaking even. After these dividends came in, which I got about 450 in dividends last week. After those dividends came in, the ETFs actually both went higher, so I think I am just about even on them now. I'm not sure about for this upcoming distribution, which should be um, on Monday. I'll probably be down on them again, to be honest, but not really sure. It depends how much they are. But overall, it looks pretty good for them. I don't know how much longer I'm going to be doing this kind of experiment for. It really just depends on will I start making more on them, because right now I basically have slightly lower equity than what I put in originally. So it's okay for right now, but overall, I think the NAV decay, even with reinvestments, just isn't really there for me at the moment. So, although the reinvestments have been going very well, you could see right here I have total shares. I started with 53. I'm at 55, just under 55 and a half right now, total shares. So, overall pretty good. Obviously, the dividends are kind of vary wildly per week, so there isn't really too much big changes in the dividends yet. But I think if you held this for like a year or so and your number of shares increased 50% or more, which does look like it is on track to do so, um, I think you could see some big gains. And honestly, it is a pretty decent way to kind of passively increase income. Now, the thing is, it's all about doing the reinvestments, because if you don't do the reinvestments and you just take the dividends out, then your position is going to decrease 50% per year. But if you reinvest and you continuously reinvest, it's honestly a pretty solid bet, I think. I mean, obviously, for right now, um, with the way the market has been since I bought, which was about 6 weeks ago, if we just go into um, I'll just do QQQ because, oops, I'll just do QQQ because it kind of follows them. So I kind of bought it. Um, I'm trying to think right around here. So actually, we are just about even, and I think today I might be even on it. I just update it week to week, so we'll see again on Monday. But overall, I basically am even on it, but I kind of bought them at a rough time where the market was basically at its all-time high. So overall, it's basically just a matter of when the reinvestments will start canceling out the asset value decay and whatever. So overall, that's all I really want to go into. Portfolio looks good. Again, very solid returns so far year to date. I hope this can continue. So far, most of the stocks that I have, actually all of them, are looking pretty good. And oh, one more thing I wanted to go into was the ETFs that I bought. So going here, sorry for clicking around so much. VMFO, starting off with that. This is a momentum factor ETF. So it basically, they invest in stocks that have seen periods of very solid growth, which I think is really cool. So basically, it's stocks that are doing very well in their stock prices, they buy them. Now, that is really good, and I do honestly like the idea of it. However, one thing that I'm a little skeptical of is they could just be buying a lot of overvalued stocks. So that is one downside of it. But overall, I think it's a pretty good thing, because usually when stocks are performing well, they continue to. That's just kind of the trend. And then I also bought VOOG, which is just S&P 500 growth. This has a fairly longer history of basically just going straight up, other than some specific cases. But overall, looks pretty solid for a long-term hold. And then VFQY, VFQY. I don't know if that will actually show up here. Okay, so this is quality factor ETF. They basically buy stocks with very strong financials, which, if you follow my channel, you know that is exactly what I like. So as soon as I saw this ETF, I wanted to get into it. And then finally, I have Vong, which is just a Russell 1000 growth ETF, just to kind of get some mid caps exposure in there as well as more large caps. So overall, it's basically the exact same thing as Voog, but a little bit more exposure to more stocks. So I like it. All of them, I think this is a fantastic balance, especially if you're considering just getting into investing like as a beginner. This is a great set of ETFs, at least in my opinion. Obviously, do your research on them. I did a significant amount of research to kind of pick these out as the ones I want to stay in for a long time. So I think if you are interested, definitely look into them. All of them are really, really solid. Their historical returns are really good. But yeah, that's about it. Also, I believe my bond. Oh, this is not up to date. The money market and the bonds. If we go here, it is. One of my bonds expires, or I shouldn't say expires. Gets like redeemed today. So after today, this will be a significantly smaller amount of my portfolio. And I didn't want to have. Right now, I have three at $1,000 each. I want to only have two, and then eventually in the future, when my account's larger, I'll probably go to 3 or 4 thousand at a time. But for now, I only want two. So by tomorrow, I believe I'll have a decent amount of extra cash to invest. So we'll definitely see about um, getting some new stocks going. I do want to have. So right now, I believe if I just do a quick count of these, I have 15 stocks at the moment, not including the ETFs. I would like to try to have between 20 and 25. So with the position amounts that I have now, that would probably require me selling off a decent amount of Celsius and maybe Chewy as well. CRNC, I think there's too much potential right now to sell. Plus, I already took profit on them. But Chewy, I'm up a ton on, so I probably will sell them a little bit within the next few weeks. And then Celsius, I honestly think as soon as I'm breaking even on them, which hopefully will be soon, I'm going to sell probably a quarter of the position at least, maybe a third of the position. Not because of lack of belief in the company. I do really like the company, but I just want to put the money in other places and also still have a decent amount of a cash reserve, which right now I have 2,600 as a cash reserve. Um, if I buy 5 to 10 more stocks, which I want to have 20 to 25, I think I said that. But if I want to buy 5 to 10 more stocks, I'm probably going to need at least 1,500, which would probably take me below my ideal amount of cash in reserve. So that's just another thought. But that's basically the plans for the portfolio coming soon and how everything's going so far. So yeah, that's about it. Thanks for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video. Hey everybody, what's up? Doing another portfolio update today. So overall, not too many changes in the actual portfolio. Saw another week of fairly decent dividends. However, we did see an overall slight decrease of 1% after the pretty solid increase last week. But overall, I think with the market the way it is, I think it's looking fairly solid for these going forward, especially as I continue to reinvest. We're now at almost 56 total shares. So I think the reinvestments will eventually catch up to the actual loss in equity fairly soon. But honestly, I don't know how much longer I'm going to do this for because just based on how it's been going, I think with the asset value decay that I'm seeing, it's not entirely worth it. Obviously, big dividends are cool every week, but in the long run, there's not too much point to it unless you're actually seeing an appreciation in total equity alongside it with reinvestments, which so far I have not. But got pretty close this week. I obviously, with the whole market being down a couple days ago, it's probably a little bit lower now. But we'll just have to see what happens with that. So anyway, moving back to the overall portfolio, let's go here. So not too many changes, I don't think. One thing I will say is that I doubled my position in Supermicro after the whole semi sector kind of mini crash that happened a couple of days ago. I doubled my position there. I had not that much in the stock, and honestly, I've been wanting to put more into it for a while, and this was just a great buying opportunity. So, also sneak peek ASML video coming up next, but let's go into SMCI and I'll kind of show what I saw. So, pretty large drop of 12% on the 27th, so 2 days ago, followed by another drop and actually a slight decrease today as well. So just with the value being right around this range where we saw that kind of, in my opinion, very large amount of oversold selling happening with the company. I think this is a great time to get in right around this price range. I think the value of the company will be increasing in the future just based on its sales growth and everything, and really just the overall value that it's been gaining during this time where the stock price has been decreasing. So anyway, moving on. Other than that, I don't think there were any changes in anything. I don't think so. So other than that, I think that's the only change I made in the past week or so. So anyway, I also did a little experiment with some valuations. Now, unfortunately, because the market is closed, some of these are not updating, or at least they tried to update and just went away. But anyway, I did a little bit of an experiment on a couple of valuations. This is basically just taking their own price to earnings per share ratio or price to earnings ratio, and comparing it to their sector average as well as the median of their sector. I basically just did an average of those two values. Um, and then what I did was I multiplied it by their own current EPS. So it's basically just the average valuation of their sector multiplied by their current EPS to get valuations. So a couple companies I was a little surprised with, like Celsius, despite falling so much, compared to the earnings price to earnings ratios of their sector, is 20%. They should be at roughly $20 a share. Now, again, this isn't really like a definitive thing. Like obviously, most companies in most sectors are very different. This is just kind of a general thing for companies that are similar to them. So seeing a 17% upside for Chewy, Dollar General, I honestly was probably the least surprised with. Their stock price has fallen so much that there is a massive amount of upside. Not really surprised there. A little bit with Lululemon, although to be fair, their stock price, if we go into that quickly as well, has been having a fairly large rebound recently. But even still, I do think that they can go a lot higher. All-time high was at 500. We're at 400 right now. And that is actually right where the valuation is putting it as well. Robinhood is seeing a fairly large downside currently. However, one thing to note is that a lot of their current price comes from anticipation of future revenue, where they're having massive expansions with options. They just added index options, huge expansions in a cryptocurrency, which is bringing in a ton of revenue. So that's kind of where their seemingly inflated price is coming from. And another thing to note is that this valuation here is significantly higher than what their price was kind of stuck at for a very long time. So they were stuck in the basically 8 to 14-ish dollar range for basically 2 years. And now the valuation here is saying $20, which is just about doubled from there. And I'd imagine once their revenue, which they are projected to have massive revenue, once that revenue is kind of caught up to where they're expecting to be. For example, their next earnings report is at 915 million for the estimate, and that is just from one quarter, compared to the previous one at 660 million. Increases like that will massively increase the valuation just based on this kind of formula for valuations, which again, there's many different ways to do it, but overall looks pretty solid. So earlier today, when the PayPal was actually working, it put it right around, I think, $96, which again is also expected. PayPal saw a fairly similar drop to Robinhood, actually, where they were up very high and came crashing down, just with a sort of series of bad news and underperformance. But now they're in a fairly solid rebound. So that valuation was put right around $96, I believe, earlier. It seems like it works a lot better when the market opens or when the market is open. But again, I don't really use Excel because personal computer, I got to pay for it, and I'm not doing that. Anyway, moving on. Snapchat's valuation came in at negative something. Basically, when the EPS is negative, it doesn't really work very well. That's just the thing I also want to highlight. So, for example, the Google Finance function for this gave CRNC an EPS of negative 14, which is not the most accurate. However, smaller companies like this, which it does say if you look up information about this function. Smaller companies, like many of the companies that I own, such as these three, kind of have information that is a little bit less reliable. So I'm not going to focus on them too much, which is why I kind of skip past CRNC there. But another one, Crocs, compared to its sector, is apparently having an upside of 265%, which if we go to the stock chart here, we can see that their all-time high was right around 180, and I am showing a value of 382. Now, just another thing to be fair with, the sector that they are in is very, very diverse. There's a lot of different things. So it could be just a little bit of a skewed result from companies in their sector. But overall, there's definitely a lot of upside to Crocs. And I think a lot of people know about that, but still. Moving on, SMCI, HIMS, and New Holdings all came in with fairly significant downsides. Now, again, with these sectors, there is a lot of diversity. For example, HIMS is mainly online retailing. However, they are put into a healthcare sector. So their valuations and their price to EPS multiples are vastly different than healthcare companies that could be very, very different from them. New Holdings, kind of the same story. A little bit of the same thing with SMCI, but also I feel like SMCI is mostly there for the potential growth, which we have been seeing from the company for a while, which I'm not going to click off of that yet because I do want to do the ASML video right after this. But SMCI saw a massive fall, and a lot of this growth here was mostly just from semiconductor and AI hype. And now that they've kind of returned to this, this area is a fairly heavy support right around the $23 to $30 range. So now that they're kind of in that area again, I feel like they're mostly going to be focused on growth. And you could see their earnings are very, very solid. I mean, 5.7 billion in revenue is really, really good. And if you compare that to their valuation, which I believe, which I'm going to go off of it anyway, I believe their current valuation is like 16 billion. So they're making a third of their market cap just about in revenue every quarter. That's kind of crazy. So I'm expecting that to be a lot higher, basically. So overall, a lot of different things. One surprise was GMM came in at 800% higher than its current valuation, which kind of crazy, but also competitors are a little weird there. If you do look up the company, it's mostly just a bunch of small Chinese software companies that a lot of people don't know anything about. I don't know anything about, but GMM, I think just based on the growth that they've been seeing, it's not insane to think about. Plus, by the way, their current market cap is like 10 million, which is why if I go into my portfolio here and we look at GMM and PSHG, I have a total of $130 in both combined. That is because their market caps are incredibly low. It's incredibly risky to own both of them, but I just think there's a decent amount of potential there. So that little starter position, if they reach $1 billion one day, is going to be pretty large. So that's just something. But anyway, just a little bit of an experiment with valuations. I think that's all I wanted to go into today. I'll probably make an update video in a little bit once, maybe tomorrow when the market's open, just to show the other valuations that weren't loading for whatever reason. But anyway, that's all I have. Portfolio is sitting at 6.1% up year to date, which I'm pretty happy with. And that's it. So thanks for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.